see. But yeah, man, Mo. On to the next hot take is the 4300 SPY. What happened, Mo? It hit 4300. It did not hold, and then yesterday was a brutal sell off. When I say brutal, it was like everything was like 2% right down. S&P, Dow, Nasdaq, I think was the worst. It was almost 3%. What's your thoughts on that?
Well, this was very expected. That's what I said. It was pretty planned, and I'll explain you. If you don't want to get too complicated, just start adding moving averages on your chart. So, and when I say on your chart, time frame matters. So, daily matters. So, let me just quickly share my screen here. I would rather show you guys what I'm talking about. All right. So we are on daily here. Let's clean the chart. Let's add. So the first moving average I'm going to add is 200, and you're going to see that's exactly where we rejected.
Mm-hmm. Which happened to be 4,300, right? Around 4,300.
4324 exact to the dot is where we rejected. The next one is what I'm watching at. It is 100, which is our next spot, which I'll give you guys exactly. Again, this is moving average, so we're going to be off a little bit here. 4085 is the next number. And if you want to give, if you want me to give you the next one, that is 50. That gives us 3973 is what I'm looking at. So basically, we looked at two numbers, and we talked about it last week too. And the two numbers was the 50% retracement on SPX, which was 4331. And then we looked at the 200, which was 43, in this case, what is it? 4330. Both cases, we touched it and we failed. Since 1950 all the way till now, we've never, ever not gone up after this level. So anytime we've retraced over 50%, we always say bear rallies are over. But if you look beyond 1950, there's been 3 occasions where we came all the way to 50 percentile and then we went like down. That's what I think is going to happen here. The whole thing with Monday, it's very simple. We've got a Jackson Hole meeting coming on Friday, which is a very key event. Whatever Powell talks about will be held till probably another year. And a lot of people don't want to be holding all these gains that they've had in the last month. So they were just selling off before that. So Monday was a big sell-off. And I'm not just saying that. Mark, I don't know if you're in the Discord. We actually swung puts. And the simple logic, this is simple. It's not fucking rocket science. If Friday is red, there's an 80% chance Monday will be red. If Friday is green, there's an 80% chance Monday will be green. Out of the last, I would say 12 Fridays, this was the first Friday that was really red. So we expected Monday to be red, just plain logic. And then we knew Friday macro level Jackson Hole meeting's coming. Now today was consolidation, because when you have a 3% move on SPX, the next day the market's just absorbing that move. I think we could see more range on Wednesday, Thursday. Friday is what you get the real meat of the move. The way you want to look at this is a lot of people are thinking that the Fed's pivoted. Fed hasn't said anything about pivot. So this rally has been very technical, right?
But what do you mean pivot? They're thinking he's pivoting to be more bullish?
No. In terms of action, what pivot means is they've changed their tune in the sense that they're not going to do quantitative tightening. They won't do the interest rate increase. They've been doing the interest rate increase, but we are okay with it. Now, it's kind of like the COVID thing. When it first happened, we would all freak out. Market would go down. After that, it became normal. They'd be like, oh, COVID getting bad. People wouldn't care. The stocks would rally. We're at that point where we're eating up these interest change increases like it's nothing. But once they start talking about quantitative tightening, that's what's going to impact the bond market. Once the bond market gets impacted, that's when the stock market is. Look, we follow the bond market. I'm not the expert at bond market, but everything I've studied, we follow the bond market, and bond market gets impacted heavily by QT, not by increase in interest rate. So that's what's going to get you the big drop if you are a bear. One thing I'll tell you, I've done this a couple of times where you get in early. If you're early, you're still wrong. Meaning if you're just front running puts, since last month, you probably have no cash left now. So just stay out. It like you tried shorting it once, it didn't work out. You can either play with the trend or just chill. If you're like, I don't see any reason why we're up, you're most likely going to start shorting the rally and get blown up. So you're like that, just stay out. Just say in the macro wise, this doesn't make sense to me. I'll stay out. But this is a very hard market to play, no matter what anyone says. And a lot of people are getting bagged, and then they get more stressed when Friday shows up because then they want to make up for the rest of the losses they've done. And they're just wiping their savings out. In a time like this where recession hasn't even started, people are making some crucial mistakes. And again, Mark, we've talked about this, the whole marketing gimmick, 2,000% gain, 3,000% gain on a Friday. How often does that happen? Now, there's what? Every day there's one ticker that does 1,000%. It's really easy for me to pull the premium high and low and just post it on Twitter, right? So it's sad. Like yesterday, the SPX, we had the 4,200 put, no joke. We got in at 9:30. It opened at 30. First thing I did, Mark, I took profits. First thing, I don't give a fuck how high it's going to go. I only had one contract. I'm taking profit. Then I rolled, and that made money. I kept selling. So the 4,200 went from 30 to 65.
Ooh.
So if you swung, it went from 930 to 65. Now, let me ask you something. Should I tell people that I made 930 to 65, or did I make 930 to 30? What's my profit? Where I execute, right?
Yeah, we executed that, not where it could have went.
Yeah, the moment I left, it's over for me. I can't tell you that it went to 65 when I sold at 30. That's what people aren't understanding. You can roll and then that's fine, but 30 is where my game ended. It didn't end at 60. And I saw people in my own chat saying, "Oh fuck, I could have held it longer." And it's going to be a very painful lesson for a lot of people that thought where you're not grateful for what you've made, you're pissed off what you left. It's life too.
Yeah, dude, profit is profit,
Yeah.
regardless. Profit is profit. A strategy that I've been adopting, if I get into a trade and I exit out and I'm in profit, I don't go back. I take it off. I don't pay attention to it anymore for the rest of the day because I don't want to go back and have that same feeling of that, oh man, had I just held a little bit longer, could have went here. I hate that feeling. I should just be happy with the fact that I didn't lose and that I made profit because profit is profit. So I wouldn't stress it too much. But going back to the Jackson Hole and the fact that people are thinking that Jerome Powell is going to pivot, I'm assuming these ideas of him pivoting is potentially due to the fact that the election's coming up, right? And they're thinking that he's maybe being very strategic with the wording and stuff, so it kind of gives the Democrats an edge to possibly get reelected. Is that maybe what you're talking about, where people are saying that he's going to pivot, that he might be careful in his wording and stuff, so it doesn't come across like we're going to have some sort of hard landing or anything like that?
More so, all the buying has been happening because there's two kinds of buying. There's funds buying and then there's retail buying. Funds aren't buying because they think they're not stupid. Funds are buying because they have a quota to hit at the end of the year. If the moment SPX goes positive, they need to make sure they can match equal return. So just so you know, Mark, in terms of number, in January till all the way March, whatever we've sold the funds, they've only bought back 20%. Retail is buying. Okay, retail is buying, thinking that Fed's pivoted, and they think that they will announce on Friday. In my opinion, Powell most likely is going to be vague about what he's going to do. He's probably going to say, we have all the tools needed to fucking control inflation, whatever. But I don't think he shows his hand before elections.